Before modern banks, people needed a way to store wealth, make payments, and move money over distance. But without vaults, apps, or account numbers, how did they do it? Surprisingly, some of the earliest bankers were actually blacksmiths. In medieval England, blacksmiths had strong buildings, reinforced doors, and fireproof safes, for obvious reasons. That made them natural custodians for more than just horseshoes. People started storing their gold coins with the local smith, who would issue them a handwritten receipt acknowledging the deposit. These receipts soon became transferable. If you trusted the smith, you could accept someone else's receipt as payment. And just like that, the first paper money was born, backed not by a government, but by a guy who made swords. But trust had its limits. Some blacksmiths took advantage of their reputations and began lending out more gold receipts than they actually had in their safes, issuing multiple receipts for the same stash of coins. Sound familiar? It was an early form of fractional reserve banking, except with zero regulation. In one famous case, a London blacksmith in the 1600s issued so many receipts that when depositors showed up demanding their gold, he vanished, literally skipped town. That failure, and others like it, taught an important lesson. Even when money is based on trust, that trust needs structure, rules, and accountability. Which brings us to a family who did build that structure, the Medici of Florence. In the 1400s, the Medici didn't just hold money, they moved it across Europe, using something called a letter of credit, a paper IOU that could be redeemed in another city, and only by the person who owned it. If a merchant deposited gold in Florence, the Medici would issue a letter redeemable in Bruges or Rome. That meant no more shipping treasure chests across dangerous trade routes. Instead, value moved on paper, faster, safer, and more discreet. The Medici also pioneered double-entry bookkeeping, a system where every transaction has two sides, a credit and a debit. It sounds obvious today, but it was revolutionary back then. The breakthrough was in transparency. It became easier to detect errors, harder to hide fraud, and more practical to grow a banking network that spanned cities and countries. At their peak, the Medici controlled branches across Europe, financed kings and popes, and helped fund the Renaissance. But power came with risk. The Medici eventually overreached, getting too cozy with politics and the Catholic Church. When fortunes turned, so did public trust. Still, their blueprint, branch networks, transferable credit, and sound record keeping, formed the DNA of modern banking. So before there were vaults and wire transfers, before regulation or central banks, banking was a patchwork of blacksmiths, merchants, and dynasties, all built on reputation, handwritten promises, and one key ingredient: trust. In our next episode, we'll follow the rise of paper money, how governments, merchants, and even con artists pushed promises onto paper, and how that changed the money game forever. Curious how we went from blacksmiths and ledgers to greenbacks and gold rushes? Hit subscribe and stick with us, because the story of money is just getting started.